On a continent where global crises often hit the hardest, something unexpected is happening. Across Africa, from Nigeria's bustling financial corridors to Rwanda's rapidly digitizing exchanges, capital markets are beginning to transform. Imagine being an investor in 2023, bracing for inflation spikes, debt crises, and volatile currencies. You're expecting the worst. But instead, you witness a quiet financial revolution, one driven not by luck, but by deliberate reforms reshaping how Africa saves, borrows, trades, and invests. But to understand how these markets, once labeled frontier and risky, are becoming more resilient and globally relevant, we need to go back to where this transformation began.
Welcome to Spotlight in Africa, where we provide the clarity, data, and intelligence investors need to understand Africa's evolving markets.
For decades, African financial markets have been characterized by a familiar set of challenges: shallow liquidity, fragmented regulations, limited transparency, and inconsistent governance. Across the continent, many exchanges struggled to attract investors due to unpredictable policy environments and underdeveloped local currency markets. Pension funds remained small, corporate bond markets barely existed, and cross-border investment? Almost impossible. The Africa Financial Markets Index, AFMI, covering 29 economies responsible for 80% of Africa's GDP, has tracked this landscape for years. And for much of that time, the story was the same. Potential everywhere, but structure nowhere. But then, something changed. Beginning in the late 2010s and accelerating through the pandemic era, a wave of reforms swept across several African economies. Governments implemented fintech-friendly regulations. Central banks began modernizing their foreign exchange frameworks. Stock exchanges embraced digital trading infrastructure. Countries like Uganda and Rwanda emerged as unexpected frontrunners, rewriting rules, improving market oversight, and betting big on financial innovation. At the same time, established players like South Africa, Mauritius, and Nigeria tightened institutional frameworks, expanded market depth, and preserved their lead. The result? A new foundation for Africa's capital markets. One more transparent, more integrated, and increasingly investor-friendly. And this was just the beginning. Reforms soon triggered a wave of financial creativity. Nigeria liberalized its foreign exchange regime, restoring market credibility and unlocking liquidity. Uganda introduced stronger disclosure and reporting standards, bolstering transparency. Meanwhile, Kenya and Egypt issued their first ever green bonds, signaling a continental shift towards sustainable finance. Other countries expanded Islamic finance, while some began constructing local credit rating systems to deepen access to capital. These innovations didn't just modernize markets, they diversified funding sources and opened new channels for regional investment flows. Africa's financial architecture wasn't just evolving, it was accelerating. As global inflation surged and debt burdens mounted, a fascinating pattern emerged. Economies that had invested in reform, strengthening FX systems, improving governance, expanding market depth, proved more resilient. Ghana and Kenya improved yield curve transparency, giving investors clearer pricing signals. Morocco and Namibia rolled out digital trading platforms, boosting liquidity and reducing friction. These moves began attracting renewed investor interest, positioning African markets not as fragile, but as dynamic, adaptive, and strategically evolving. This marked a major turning point, one that hinted at Africa's transition from frontier markets toward greater global relevance. But progress has not been universal. In fact, more than 2/3 of the countries in the index experienced stagnation or slight declines. The reasons? Policy uncertainty, persistently shallow liquidity, weak pension fund participation, and limited development of long-term financial instruments. These gaps continue to restrict local investment and hinder the growth of robust bond and equity markets. Africa's momentum is real, but uneven. Today, the continent stands at an unprecedented point in its financial evolution. Countries like South Africa, Mauritius, and Nigeria boast some of the strongest institutional frameworks in the developing world. Rwanda and Uganda exemplify how smart regulation can leapfrog traditional barriers. New financial instruments, from green bonds to sukuk, are unlocking billions in potential investment. And with improved governance, technological modernization, and a rising culture of transparency, investor confidence is quietly rebuilding across borders. This is Africa's financial system at its most promising moment yet, not fully realized, but undeniably on the rise. The journey ahead remains challenging. To unlock the next stage of integration and growth, African economies must align regional savings with productive investments, harmonize financial regulations, and expand local currency bond markets. But what's clear is this: Africa is no longer waiting for global markets to define its financial destiny. It is writing its own playbook, driven by reform, innovation, and an emerging belief in the power of well-structured capital markets. And if these trends continue, the continent may soon shift from being a frontier of untapped potential to one of the most important and dynamic financial regions in the world.
For more intelligence on Africa's economy, finance, and capital markets, subscribe to our channel at Spotlight in Africa.